Hello, today is June 20th, 2021. Behind me is Hadrian's Wall. I picked this background because one of the most exciting things I did in June was to organize a trip to Hadrian's Wall with a friend. We're going to be hiking there the first week of August, the entire Hadrian's Wall path, 84 miles from west to east. So I think it's going to be pretty great. I'm really looking forward to this. But before this is going to happen, I need to give another update on my stock portfolio. So in this video, I'll just be discussing what's new in June. So I like to think of my portfolio as having three different components. The first group is what I would call value. Those are companies that are mature, they have high earnings and relatively low PEs, so they seem to be relatively cheap, and they also pay very high dividends. The first company in that group is GlaxoSmithKline, a pharmaceutical company here from the UK. Then I bought some shares in China Resources Cement, a materials company, Iberdrola for energy and renewables, AbbVie, another healthcare company, and they're also in the beauty business. And then finally, I got some shares in Rio Tinto, a very large copper miner. I would like to add to my value stocks lots of company from Asia in the future, China and other emerging markets, because I think they have great potential. And also I want to buy a financial institution because I don't have any exposure to the financials at the moment. So I thought, hey, why not kill two birds with one stone and see if we can find a nice bank somewhere in Singapore. I did some research, and there are three big banks in Singapore. The first one is the Development Bank of Singapore, DBS. The second one, the United Overseas Bank, UOB. And finally, the Overseas Chinese Banking Corporation, OCBC. Their ticker symbols at the Singapore Stock Exchange are DO5, U11 and O39 respectively. And at the time when I did this research, I think June 3rd, their stock prices were 29.82 for DBS, 26.10 for UOB, and 12.42 for OCBC. So how could I, decide which of those three to buy? First, I looked at their, size and some valuation metrics. DBS is the biggest bank with a market capitalization of 76 billion, followed by OCBC 55 and UOB 43.6 billion. So I sort of liked OCBC right here because it's sort of in the middle. Also, when you look at their price earnings ratios and price to book ratios, OCB is slightly cheaper than the other. And in terms of their dividend yield, they all yield between 2.5% and 3%. But once again, OCBC is sort of in the middle, and I kind of like that. I also looked at some sentiment valuations. This is taken from marketscreener.com, where 21 analysts give their opinion, and they're all very positive. Everybody seems to be quite optimistic on these banking stocks. But again, OCBC was slightly better because 12 out of 21 analysts recommended a buy, as opposed to just 10 for the other two companies. A similar conclusion could be reached by looking at investing.com, where once again the three banks are very similar, but perhaps OCBC has ever so slightly more upside. And then also OCBC, it turned out, was the only bank of the three that managed to keep its revenue stable or even grow it slightly during the pandemic year 2020. So I have no idea if these metrics are really important or if they give you a good reason to come up with a good choice, but that's why in the end I decided to buy some shares in OCBC, the Overseas Chinese Banking Corporation. Okay, here they are. Overseas Chinese Banking Corporation, very good. Now in Singapore, they have minimum lot sizes of 100, so I can buy 100, 200, 300 shares, but nothing in between. I will just buy 100. So I will buy 100 shares for £673, and with additional fees and commission, it comes up to almost £700 for this order. As a consequence, there is now a brand new stock in the value section of my portfolio, OCBC Bank. Fantastic. The second component of my portfolio is gold miners. That's because I'm making a big bet on higher inflation. I don't think it's all going to be transitory like some people say, but I think that higher inflation is here to stay for at least a couple of years, and in principle, that should be good for gold. So the gold miners I currently own are Barrick Gold, Kinross, Yamana Gold, Agnico Eagle, Anglo Gold Ashanti, Hecla Mining, Trans-Siberian Gold, and Jaguar Mining. The new company I wanted to add is another blue chip gold miner, one of the big ones, very well known and profitable, and that is Newmont Mining. So here we go. I will put £1,000 into this company, and I'm going to use my trading credit for this transaction, so I don't have to pay a commission for this month. And so Newmont is the latest member in my collection of gold mining stocks. The last category in my portfolio is what I would call risk. They're not really super risky stocks, but they're much more exposed to the consumer and more narrative driven. They also have much lower earnings and pay no or just a very small dividend. I only have one stock in that category at the moment, and that's Funko. Here the story was that they were going to introduce NFTs into their business model, and with all the hype around crypto and Bitcoin and all this, I thought that could be potentially helpful for this stock. Nothing really has happened in that direction, but Funko has been quite a roller coaster, one of the most volatile stocks. Sometimes it was up 17% and it was down as much as 9% in a single day. But yeah, so that's what comes with higher risk, I suppose. And I decided on another company for this category, namely the following one. The company I decided to buy for the risk part of my portfolio is called Thor Industries, ticker symbol THO. They are an American manufacturer of recreational vehicles, like those. So they look nice, they look professional, they look popular. And as you can imagine, right now during the pandemic, they're selling a lot of those because lots of families have discovered this lifestyle of just being on your own outside in the wild with one of these nice vehicles and spend your vacation that way. Why do I think that Thor Industries is a risky company? Well, most investors probably believe that the company has reached its peak, that it's not going to go much higher, because after this crisis, everybody is supposed to go back to the old ways and vacation like they did before. And that would translate into far fewer sales of RV homes and lower income for Thor Industries. My risky bet is that this is false, that investors are wrong about this, and that actually the company is going to continue to have really high profits in the future. They recently reported their earnings. They were excellent, I think the best in their history, but now people think this is probably the high point and now earnings are going to come down. If this is then wrong and actually the next earnings are also really good, that could mean that the stock price goes much, much higher. It's very risky. It might not happen and I might actually lose money on this one, but that is the risky bet, and so I welcome Thor Industries in the risky part of my portfolio. Okay, so this is basically my stock portfolio update for the month of June 2021. For most of June, I had sort of been unchanged to slightly up, but that changed radically last week. It was a really bad week. And the reason is the Fed, they had a meeting and they were generally perceived as very hawkish, so initiating tighter monetary policy. And so they want to taper their asset purchases and raise interest rates twice by 2023. And that then had bad consequences for the gold price. It just completely collapsed. And that has predictable consequences for my many gold stocks. They're all down really big time.
In just 24 hours, gold lost almost $100, with the precious metal dropping 5% on Thursday. The trigger was the Federal Reserve's interest rate announcement. A surprisingly hawkish stance led to some chaotic trading, and gold dropped well below the $1,800 announced level.
Also, the 10-year Treasury yield fell below 1.5% again, and that means that growth stocks become more attractive and value stocks become less attractive. Since I have a lot of those value stocks, again, that did not work out well for my portfolio. To me, the whole thing seems a bit crazy. How can interest rates for 10 years be at 1.5% when inflation runs at around 5%? And even if the Fed is a bit more tight now, they're still very, very loose. I mean, you just imagine that in 2023, interest rates have been raised twice, so they just be at 0.5 to 0.75%. And if inflation is still 3 or 4 or 5%, that's much too low. So that should still be good for the kinds of stocks that I own. So yeah, it's a bit frustrating. It's strange. I don't understand why the markets are reacting this way. It seems illogical to me, but that's the way it is. And yeah, even though I still think that my general investment outlook is sound, so far it has not worked out at all. But I will stay the course. I want to buy more of these types of stocks. I want to buy more gold stocks and more value stocks. Right now, I'm fully invested. I don't have any spare money left. But come July, I'm hoping to invest some more money into the stock market. So yeah, I'm looking forward to that. The whole thing is an adventure. And yeah, I will see you next time.